Hello guys, how was your day? I hope you had a good day. Today I will explain about the basic of accounting. You have to understand this material as a basis for knowledge in the next cycle of accounting materials. So without any further ado, let's get it. Definition of accounting. What is the definition of accounting? Accounting is an information system that by the process of identifying, recording, and communicating economic events from a company or organization to concerned parties, the users of financial reports as a material for considering alternative decision making. Who is using the accounting data? The accounting data user is divided into two that are called internal user and external user. So what is the internal user and external user? And who are included the user? Internal user. The internal user of accounting information is the party directly connected to a company's operation every day. For the example, management division using information to evaluate and analyze the organization performance and financial position to make important decision and appropriate action to improve business performance in profitability, financial position, and cash flow. The second, the owner. The owner invests capital to launch and run a business that is essential to making a profit. The third, employees. The employees need financial information from the company as a consideration to them about the contract he is about to enter. After we discussing about the internal user, so now we move on to the external user. What the definition of the external user? The external user is individuals or group outside the company who want to know about the company's financial information for particular purpose, such as for decision making, investment, and etc. For the example, number one, investor. Investor use accounting information to determine whether they should hold, add to, or reduce their investment. Number two, creditor, which are those that provide organization with alternative capital source. The example of lenders include holding loan holders in companies, banks, and other financial institutions that provide loans. Number three, suppliers. Suppliers, like lenders, are among the users of accounting information to assess the credit worthiness of customers before offering credit goods and services. Number four, government agency ensure that when the user of corporate accounting information are consistent with the rules. Next, measurement principle. In accounting, there is a principle of measurement set according to requirements. There are two principles of measurement between them. First, historical cost principle is the accounting principle in which companies record assets at cost. Second, fair value principle, the accounting principle in which assets and liabilities are reported according to their natural value or market value. Once we know that principle of measurement in accounting, then as an accountant, we should be able to select the principle of measurement that a company needs. In choosing principle of measurement, we should take note of the following. First, relevance. It means financial information is capable of making a difference in decision. Second, faithful representation. Is numbers and description match what occurs or factual. There are assumptions in the accounting that we must understand in creating financial statements, such as first, monetary unit assumption. Is corporate accounting simply records transaction of monetary value? Second, economic entity assumption. The activity of unit business is different and separate from that of its owner and other business units. Third, time period is usually the accounting period is divided into time periods, fiscal year and calendar year. Fourth, going concern. The company is always optimistic that its effort will continue. And then, basic equation of accounting. There is a key formula in accounting which is that total asset equals liabilities plus equity, where the left side, namely asset, must be balanced with the right side, namely liabilities plus equity. Asset is its capacity or wealth of a company that has the economic value to carry out of these business activities and can benefit in the future. Liabilities is the debt of foreign loans such as bank must eventually be repaid. Equity is wealth or capital derived from investment of company owners or others to carry out business activities. How about share capital? Share capital ordinary is the amount paid by shareholder for the regular stock they buy. And then revenues, the gross equity increases that result from corporate business activities. Revenue usually result in an increase in assets. Expense is cost the company consumes or uses in the process to generate revenue. And the last, dividends, the distribution of cash or other asset to the shareholders. Equity will increase if there are investment by shareholders and receiving income or revenues, while equity will reduce if there are distribution of dividends to shareholders and charge the expense. Accounting cycle. There are 8 stages of the accounting cycle, among which is analyze business transaction, journalize, post to ledger, trial balance, adjusting entries, adjusting trial balance, financial statement, closing entries, post-closing trial balance. For the initial step, we will study the analyzing business transaction. There are criteria for determining the activities of the company that are included in the economic business transaction, such as whether the transaction will affect the financial position, such as asset, liabilities, and equity of the company. For the example, first, the company purchasing computers to support the effectiveness of its employees' performance. The transaction will affect to the financial position because the company will be recorded as the computer as their asset. That means their asset will be increased while their cash will be decreased because of the purchase the computer. Second, discuss product design with potential customer. The transaction won't record because it is not an economic business transaction. And third, the company pays the rent for the building for 1 year. The transaction will be recorded such as their asset will be increased as a building, while the company's cash will decrease. There are the example of identifying and analyzing business transaction. On July 1st, 2021, Jeremy set up a law office called Ledger Selfish Ltd. During the first month in operation, there were the following transactions. On July 1 to 2021, the shareholders invest in cash in $10 million. This transaction will be recorded as cash, and share capital will be increased because the investment activity amounting to 10 million. On July 4, 2021, buy equipment on credit, $3 million. This transaction will be recorded such as the asset as an equipment, and account payable increase will the amount millions because of the purchase of equipment credit. On July 12, 2021, receiving cash from customer for having performed 1,500,000 in legal service. It will be recorded as their cash and revenue will be increased with amount as 1,500,000 because they receive cash from their customer. On July 20, 2021, out of cash from a bank that contains 700,000 banknotes payable, it will be recorded as the cash and notes payable will be increased with the amount as 700,000. Notes payable is an account that increases when a company gets a loan from another. Meanwhile, the cash will increase because the money from the loan will go into the company's cash. On July 25, 2021, legal service were provided to customer, but 2 million had not been paid. It will be recorded as the account receivable and revenue will increase by 2 million because the company has provided its service to customer but hasn't received payment for the service provided. On July 30, 2021, paid office rent for July amounting to 800. It will be recorded as cash and rent expense will increase by 800 because the money in cash will be released by the company so that the company's cash will decrease, while the money spent will be referred to as rental expense, which will increase on equity side. On July 30, 2021, pay monthly expenses, employee salaries of 500,000, advertising expense of 100,000, and other expense of 300,000. It will be recorded as cash will be increased by 900,000 and expense will be increased with its details like salary expense by 500,000, advertising expense by 100,000, and other expense by 300,000. Okay, thank you for your attention. See you next time. Hope you enjoying this video. Goodbye.